Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. What do we got going on? Well, we got the market kind of moving sideways, right? But if you look at it, you can look at the Dow Jones. The Dow Jones kind of is making a double top. It came down, went back up right around 45,000. We have a double top, which is usually the sign of a topping out pattern. Now, if it can blow through it and push higher, then we continue higher. And I do think they're going to push things up. I still think the S&P going to hit about 6,300, maybe 6,400. I think Bitcoin, I don't think that's done yet. I think that's going to still go higher. It's going to probably push through the 100,000 mark and get up to 120,000. That's just my take. But you see that we had Jerome Powell come out and talk to us, and he said that we're very fortunate because we have avoided a recession. All of this stuff that the Fed has done has avoided the recession. Now, I would argue with that point a lot. Now, I still think we're in a recession, but by their terms, a recession is still on the way. They have to keep printing an insane amount of money to keep us out of the recession. And I don't think they can do that much longer. I think the recession is going to be coming now. It's kind of interesting. He also said that we're in a good place on inflation. Inflation is in a good place. I really don't get that. We came out with the CPI number and it was up 0.5% month over month, 0.5%, right? Month over month, the CPI went up by 0.5%. Now, if you do the math, multiply 0.5% by 12 months, well, you got 6%. 6%. Now, they're saying we're only at 3%, but even by their own numbers, we're at 6%. And I'm telling you, we're still close to that 10% number. And it's going to be a big problem. Going to be a big problem because inflation is going in the wrong direction. The last 4 months, we've gone up, gone up, gone up, gone up. We're going to continue to go up. You see, they think that inflation is going to come down to their magic number of 2%. There's no reason for that number. I mean, why not have 0%? I don't want to see prices going up. Matter of fact, I'd like to have a negative 2%. And let's get the prices coming back down. But they can't have that. They have to keep printing, the money, and it's going to create this inflation. Now, people think that we're not going to have inflation. That inflation is going to go away because houses are going to come down, and that's going to fix the inflation numbers. And it's possible that that will reflect in the numbers as the house prices just start to come down, and they will start to come down. Rent will start to come down, and that's about 30% of the CPI is the housing numbers, and that will put downward pressure on inflation. But you're going to still have food prices going up, gas prices going up, heating your home prices going up, insurance prices going up, property taxes going up. You're going to have a lot of things going higher still, but they say that inflation is in a good spot. You see, I think the Federal Reserve doesn't have a clue what they're doing. They say we missed the recession. I totally disagree. The recession's still coming. They say that inflation's going away. I totally disagree. I think we're going to hit higher numbers. They keep reducing rates right on the short end, and the long end keeps going higher, right? I still say we're going to see 10% mortgages. Maybe that happens. Maybe that doesn't happen. But I really think what's going to happen is we're going to get into this stagflation thing. Now, what's stagflation? Stagflation means inflation is going to be continuing to go up, but the economy is not going to be doing well. The economy is going to be going down because of because the interest rates on mortgages, on car loans, they're going to keep going up. You see, they're saying we're at 3% inflation, and I think they're just a bunch of idiots to begin with. They're smarter than that. They know better. The commodity index, just the commodity index for the year is up 25%. 25%. And that's a bundle of all commodities, not just gold and silver. It's all commodities, corn, wheat, soybeans, throw in the pork bellies. It's a commodity index, up 25% year over year. But yet they sit there with a straight face and they tell us that inflation's only at 3%. And because we're climbing upward, it's already funny. They're already blaming the Donald. How long has he been in there? I don't know, a month, but they're already putting the inflation numbers on him. He's causing this inflation because he's going to bring those tariffs out. And maybe that's part of it. Maybe it is part of it, but they're going to give him the blame as inflation continues to creep up higher. Now, this is fascinating to me. Okay, we talked about this a little bit. They're going to do away with all coins. We're only going to have dollar bills, no more coins, right? They're starting with the penny because you see it costs 4 cents to make the penny, which is 1 cent. And now in the government's, they're thinking that's a good deal. Spend 4 cents and you crank out a penny, you get 1 cent. Well, the nickel costs 12 cents to make, and then you turn it into 5 cents. See, that's how the government has always done business. But the fact is that anything real like a coin, which isn't even real anymore, used to be real. We used to have silver, and they used to have gold coins. Now the penny is not even made with copper anymore because they can't afford the copper to go into the penny. Nickel's about 70% copper, 30% nickel, but they can't afford to make it. That's 12 cents to make it. So the coins are going to go away, and we're going to just paper over the matter. We're going to just have bills. Now, the dollar, that's going to be the new penny, right? The dollar is going to be the new penny, and the $100 bill, well, that's going to be the new dollar. You might as well just put a little decimal point on all your $100 bills because they're like the new dollar. See, the purchasing power has been lost. We've lost 98%, 99%, 100% of the purchasing power of the dollar. So we're going to have to hyperinflate our way out of this. But they're going to do away with the coins, and we're just going to have bills. We're going to have the dollar as the new penny, and the $100 will be the new dollar. You'll see how this plays out. Now, it's fascinating. I want to talk a little bit about what's happening to gold. You see, the stock market, I think, will push higher, or Bitcoin will push higher, and all it is just the printing of money. And you can see that as the gold prices continue to go up higher and higher. But it's more than that. It's a little bit fascinating. You see, gold is a tier 1 asset, the only tier 1 asset besides the bonds, right? So central banks, they want to hold tier 1 assets. And so they're replacing the dollar, the paper, right? They're replacing that with gold. Gold is becoming a bigger part of the tier 1 assets. Ever since we weaponized the dollar. See, we have the reserve currency. We should never have weaponized the dollar. Now, how do we do that? Well, we stole the assets from Russia, about $300 billion of their assets. We just confiscated them, right? I guess we gave the money to the Ukraine so they can go send bombs into Russia. So Russia's basically paying to blow up itself. We weaponize the dollar. And you cannot do that when you have a reserve currency, because then everybody wants to get out of the dollar. If you can do it to Russia, you can do it to anyone, right? I mean, you can just basically weaponizing the dollar. So they want to get out of that. And how they want to get out of that? They want to get out of that with gold. Now, it's fascinating. You see, they've been manipulating the price of gold and silver, has been manipulated lower for the last 20 years or so. They keep pressing the price lower, but they're losing control of this. You see, they're losing control of this. They try to paper over everything, but the paper versus the physical, right? That's what you have to look at. Now, physical gold, there's 1 ounce of physical gold for every 200 ounces of what's called paper gold. Now, what's paper gold? Paper gold would be things like, well, let's talk about the London Exchange, right? The London Exchange. Now, they trade commodities, right? They trade gold. Gold is traded on the London Exchange, traded on the COMEX, and traded on the Shanghai Exchange. Those are the 3 main exchanges to trade gold, right? And so on the London Exchange, they have about 30 million ounces of physical gold, right? Problem is they have over 300 million ounces of paper gold. Now, if they get a run on this gold, which is happening right now as we speak, and that's what's sending the gold market higher every day, higher, 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 higher. Now, eventually we'll get a pullback because there were some gaps in there. We gapped up, and gaps normally get filled. So I do expect the pullback to come and fill up those gaps. But the reason we're going higher and higher and higher every day is because the London Bureau Exchange, they don't have the gold anymore, right? They got 30 million ounces and over 300 million ounces in paper every month in gold, right? Okay, so just 10% of people want to take physical possession of the gold, which they have the right to do. It's commodity futures trade. trading, right, where you can actually take delivery of the commodity that you're trading. So just 10% of the people want to take delivery. They don't have the gold, right? So anyways, they just go, well, you have to take cash. If you want the gold, it's now a 3-month wait to get the gold. Used to be 1 day. Used to be 1 day you would get the delivery, right? Now it takes 3 months. 3 months because they don't have it. They have to go get it from somewhere. And the COMEX is having the same problem. You see a lot of gold flowing into the United States out of London. Now, why are they doing this? A lot of people think it's because of the tariffs. They think that the tariffs will raise the price of gold. And that's possible. That's part of it, right? I mean, tariffs coming from Canada, coming from Mexico. Mexico's a big miner, silver mines. They ship a lot of the silver up. If you got to pay a 25% tariff, that's going to send the prices up higher, 25%, right? The tariffs could affect the price of gold, the price of silver, but that's not really it. What's really it is they're losing control. They're trying to paper over this mess, but the thing is people want physical possession of the gold now. And these are very wealthy people. Contracts, I mean, these are large contracts traded in 100 ounces, 1,000 ounces of gold, and they want to take physical possession of it. They're wealthy people. And they go, no, we don't trust dollars anymore. We want physical possession. They don't have it. It's just the COMEX. Okay, January is a slow month usually for trading gold. It's a slow month. Very few people take possession. Things are usually settled in paper, which is dollar bills, settled in dollar bills. But in January, just this past January, was a record amount of physical possession. They go, no, I want the physical gold. And it was over $6 billion. That was a record. In the slowest month of the year, they set a record for people taking possession. See, there's a big problem here. Now, what's happening now? You got to look at the 3 exchanges, London Exchange and the COMEX Exchange, and you got the Shanghai Exchange. So it's flowing out of the London Exchange, coming to the U.S., coming into the COMEX, flowing out of the COMEX. Now, why is it flowing out of there? Well, because the Shanghai Exchange will pay you a higher price for the gold. Because Shanghai Exchange, they don't settle in dollars. They settle only in gold, and that's why there's a premium, right? There's a premium on that, so you can buy it cheaper here. Take delivery of it, ship it to the Shanghai Exchange, and they will pay you a premium on the gold. You see, there's a problem. You got this paper, 200 ounces of paper for every 1 ounce of physical gold. Now, silver is much worse than that. 400 ounces of paper for every 1 ounce of physical silver. You're going to break one of these exchanges. Maybe the London Exchange, maybe the COMEX will break. One of these 2 exchanges is going to go down. When that happens, it's all over, right? You want to have physical money, this is real money, gold and silver, in your possession. You don't hold it, it's not your money, right? You got to have it in your possession. You're holding the GLD, you're holding the SLV. That is not money. That is paper. That is just paper, and they can print as much paper as they want. Our government, they're trying to paper over everything, taking away the few coins we have left. Already took the gold and silver out of the coins, realizing they can't even print the coins, can't even, coin them at this price with the fake metal, and it's just cheap metal. They can't even afford cheap metal because the dollar has lost so much value. But you need real money. You need physical gold, physical silver in your possession. People say, but Mike, I can't afford physical gold. Okay, start with silver, about $32 for 1 ounce. And now hopefully you can come up with $32. If not, knock on your neighbor's door, ask to mow their lawn. Maybe they'll pay you $30 to mow their lawns. I don't know, but somehow you got to get in the game. You got to get in the game because the game is going to take off. Look, when this thing blows, when one of the exchanges blows, we're going to go to what would be known as the real real value. The real value is not what you see in the spot price. There's no way silver's worth $32. Worth a lot more than that, worth over $300. Gold, well over $10,000, probably closer to $40,000. When one of these exchanges blows, there's not going to be any way for you to get in the game because things will start to adjust to their real value. And their real value is much higher than right now. So look, if you're poor, $32. It's all you got to come up with. You get 1 ounce at a time. Stick it away. If you can afford 1 ounce a month, 1 ounce a week, whatever you can afford, you're going to be better off. Look, I'm not selling you anything. I don't sell this stuff. I'm just telling you what I'm doing and how you can protect yourself from what the government's doing. What's the government doing? Well, they're printing the money as fast as they can. Look at the Donald's got the Doge boys out there trying to get things under control. They can't get it under control fast enough. They're printing the money, printing the money, printing the money. You're going to see inflation going up month over month. It's not under control. Month over month going higher and higher. We're going to go into a recession. We're going to have what's called stagflation with the inflation rates going higher and the economy doing worse and worse and worse as we go into the recession. It's just going to happen. That's the way it's going to play out. Protect yourself with some real money. If you like this stuff, give me the thumbs up. I'm Tall Mike. Punch that subscribe button. Get out there, everybody. Have a great day. We'll talk again real soon. Bye-bye now.